Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Petersen.
All right, we are back with another episode of the Real Estate Investing Club. I hope you guys are having a great day, whatever day it is and wherever you are. It is always Friday on the podcast, so bringing that Friday energy to you. It is a good day because we have Tim Woodbridge with us on the podcast. Tim focuses in on mobile home parks, which, as you guys know, is one of my favorite assets to buy. So this should be a good episode. If any of you guys out there have been curious about mobile home parks, why you should buy them, why they're a great investment, this is the episode to be listening to. So I'm excited to jump into it. Tim, thanks for hopping on.
Gabe, thanks for having me, man. Definitely appreciate it.
All right. I told you before we got on here, we always like to start with stories. We like to hear how people got to where they are. So why don't you take us to the beginning of your story in real estate and tell us how you got started and how the journey's been going since then?
Yeah, dude. So, really quick. I mean, I went to school for nursing. I was a nurse for about 8 years. I grew up very blue collar family. You know, everyone said work really hard, get a good solid job. So that's what I did. And then, like so many other people do, I read Rich Dad, Poor Dad, and I was like, oh, this is how they do it. The asset liability, these are new terms to me. And so, just from there, did a deep dive into, okay, what different asset classes, what am I going to go into? And I heard Frank Rolfe on the BiggerPockets podcast, and I was like, oh my gosh, like it pulled me, it grabbed me, like it excited me. And I was like, I like it for all the same reasons Frank is likes it. And so from there, I did some more research, and then Frank said, go check out mobilehomeparkstore.com. I thought it was a fake website, and then I went on it and I saw it was a real website. And then I saw a park that was, about an hour, 15 or so drive from where I live, and just reached out to the guy. Ups and downs on maybe I'm going to take it down, maybe not. I didn't know anything. I really didn't know anything.
How many pads was it?
What's up?
How many pads was it?
So it's 36 pads. 10 of them were occupied. Lot rent was $125. And as you can imagine, it was a lot of difficulty getting financing, difficulty. I was green. I didn't know anything. I had friends who had experience with it, but like, bro, I was navigating uncharted territory for sure and figuring it out as I went. But yeah, I mean, we closed it. I still own it. It's it does pretty well. It's one of those things, and I tell a lot of people this, your first deal is not going to make you rich. It's going to make you know that you can do it. It's going to teach you so much so you can take that to the next deal and the next deal and the next deal. And you just build on all of that. And that's how you get rich. So yeah.
Actually,
I got stories.
Yeah. My first mobile home park actually was one of my best, just because like we got crazy seller financing terms. So it's not all, I don't feel like it's going to make you rich, but sometimes you get those, you walk into something and you don't realize how good it is until, you're
Yes.
down the line and you've had experience, like, wow, I got really lucky right there. Awesome.
Everyone was telling me everyone was like, and I knew people who had a lot of mobile home parks, and they're like, don't buy this. This is way overpriced. You're getting a bad deal. I mean, by going off of, Frank Rolfe's 10 cap and like lot rent and stuff like that, it didn't make sense. But what I did is I took it and I infilled a ton. And I didn't know anything about infilling.
Yep.
I didn't know how. I bought the park knowing I have to increase occupancy. I don't know how, but that's what I have to do. And then, all these things kind of fell into place, and we went from 10 to 19 in 1 year. And then the value went from let's see, at close it appraised for 355. The value went after that year appraisal of 570. So we were able to refi, get all our cash back, and it was like, oh, okay, like. I, I didn't
I
know
get it.
exactly how I was going to do it, but I did it. And like, this is the magic of commercial real estate. This is the magic of mobile home parks. And I was super hooked from that point forward.
Yeah. And I feel like that is one of the things that is very unique to mobile home parks specifically, is that you can force the appreciation through infill. Infill is, buying a park that has 60 sites and only 10 of them actually have homes on them, and then bringing those homes into the park, or maybe there's homes there that have been vacant, they need to be flipped,
Mm-hmm.
and getting those up and running online has such a huge impact on your NOI that it increases the value that much. Not a lot of times you'll find a multi-family property that is 30% occupied. It's just not out there. But that is the case with mobile home parks, which is one of the reasons that I really like them. It's also one of the most difficult things to master with buying mobile home parks as an asset class is infill. That is the value add. That's the hard part. So let's dive into strategies on how you get first, why mobile home parks are so valuable in your eyes, and then let's talk about how you execute your strategy once you get them.
So, my thoughts on mobile home parks have evolved since like the beginning. So like
Okay.
when I first got into them, I'm like, I'm going to buy this, I'm going to get rich. I'm not going to pretend like that wasn't the main goal. Since then, I see the value in that. Like, there's such a need for affordable housing. And so, like, sure, I'm going to do well. My partners are going to do well. Our investors are going to do well. But also, there's such like a big need in society for making things like taking beat up trailer parks, making them a little bit better, and just like planting seeds for a nicer world, right? Like I'm really excited about stuff like that right now. I've been talking with the people in my team, like in our core WCG team, and it's like sure, like money, but like what's bigger than that? And so we've been doing a lot of like vision casting. And so right now it's like by 2030 we want to have a portfolio that's worth 250 million. And what that means is we want to provide housing, affordable housing to 10,000 people. And we want to provide 1,000 different investments, or 2x equity multiple in 5 to 7 years, which is what we go for. So, we get investors great returns and great tax benefits. And it's like all of this stuff that's more than just like numbers on a spreadsheet. Like, what does this actually mean? Oh, like if I can, be part of something that is providing affordable housing that, to people who didn't have it before, and like $10,000 or 10,000 people by 2030, like making a big difference in society and creating a legacy. Like these are the things that I'm really excited about today.
Yeah. Yeah. And if you look at like a lot of, so many, especially coastal markets, if you look at the average rent in that area, and then you look at the cost to rent a mobile home site, it's usually a quarter, if that, of the average rent.
Oh yeah.
One of our parks here is in Moses Lake in Eastern Washington, and the rent in the area is like, for a 1-bed, 2-bed, apartment is 12 to $1,800. And site rent there is like $400. And so it
Mhm.
definitely is, if you can only afford $400 a month, it is a great tool and a great resource for you to use. So yeah, I also really believe in mobile home parks, long-term stay RV parks as something that fills a need in society. It's something that definitely is needed out there. It's also a great opportunity as an investment because of the opportunity to infill. So let's go into that. Let's just talk about it as from the business side, from the investment side. Let's go back to infill. That's one of the strategies that a lot of people use. It's also one of the hardest things to do for mobile home parks. How do you guys do it when you're looking at a deal and it's 50% occupied, or there's 50% of the lots have homes on them? How do you go about strategizing on bringing homes in or getting other people to bring them in? Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
So first of all, we don't do heavy infill plays right now. There's a lot of uncertainty, and that's fine if we're playing with our own money, but we don't play with investors' money like that. We make sure like if there's infill, we're usually projecting no more than like 5 homes a year in our business plan, and honestly, a lot of times we'll do less. It's just because who knows what's going to happen, and right now we are developing like, okay, what does the in-house strategy look like? So one of the verticals, like we're all about keeping things in-house so we can control it and like get the best returns for everyone and make sure that the quality of the asset improves instead of, not. But so, we do all management is in-house through our management vertical. We are creating right now a home vertical where all they do is infill the parks that we have, and, maybe a couple other things. But really, like, I'm working with a really great person who used to work for Clayton. And so she's come onto the team, and it's like she's going to be taking ownership of all the infill, all the ins and outs. So like you said, it's hard. There's a lot of moving pieces there. And I know, like I've done it, but I know that I do not have the bandwidth for it. The other people on the core team right now don't have the bandwidth because we're really focused on building up things, acquiring new parks and whatnot. And that's, one of the weak points. So we're bringing this awesome person on who she did like a cold outreach to me one time. And now has ownership in 4 parks with us, about to have ownership in another 2 parks, and is just like the master, if you will, at infill. And so that's our strategy. It's like, who's good at this? Because I'm fine at it, but I'm not great. I'm good at like 2 or 3 things. Everything else, I work with people who are better at it in our team. And so that's kind of what sets us apart from other companies, is just like, let's build this out so everyone's really solid at what they do and excited with what they do, and make it so I'm not wearing all these hats where I'm subpar compared to other people, or my partners aren't wearing all these hats, where we can just grab someone better and give them a little bit of equity into the whole, and then everyone's winning. And then, then when she's really, really solid at it and we have our numbers super dialed in, we have decent numbers for infill, don't get me wrong, but like they could be definitely like cleaned up in terms of like what are actual numbers for actual like today sort of things. When we get that, then we'll be unstoppable in that. Then we can take, okay, it's only half occupied. Well, instead of 5 homes a year, maybe we can do 10, and then maybe we can do 15. I mean, we're not going to overpromise anything. Like, we're still conservative at our heart, but at least then we can be like, yeah, like we see the value in this park. We see the value in the infrastructure. We can come in and we can infill it like this, and then I'll see in a much bigger scale what happened with my first park. The magic of forced appreciation, as you know.
Yeah. I mean, with the parks that I'm looking at today, I feel like infill is the only strategy that really works, because there aren't a lot of deals out there, at least that I've been looking at, that are the size that I want, that will, that get the returns that I'm looking for a mobile home park without doing infill. I mean, there are so few parks out there that, the rental rates are below market. There's not a lot. I don't know. Maybe you guys are experiencing something different. If infill is not the strategy that you use, and you just look for parks that you're just buying at a price that makes sense, that's awesome. Is that what you guys are mostly doing? It sounds like infill hasn't been your primarily what you're focused on. You're focused on more on just acquisition, on finding those deals. Is that what you guys are using?
Yeah, yeah, and it's all like, for anyone new also, like in my experience, I don't find deals. See deals, we underwrite them, and then we make offers based on like a conservative business plan. And I get told
Yeah.
no all the time, and it's fine. Like I get it, but
Mhm.
like our North Star is like a 2x equity multiple for investors in 5 years. And of course, all the tax benefits they get in year one from cost seg is like all this super bonus. But like every deal that I make, I can defend the why. Like I'm not just giving
Mhm.
you a lower offer because I want more and I want you to have less. It's like I want to buy this from you. So but in order to buy it for cash at close without getting creative, I can only give you this. If I'm raising this much money, I have to get this return. And so like a lot of times I'm talking with brokers and I'm like, let's get on the same page. And here's our underwriting. Here's what you can see. If there's anything that we're wrong about, let us know. Um,
Mhm.
and it's, working on the same page. But yeah, back to your question, it is a lot of taking over things that are under market rent, uh, running them as the professional company that we are instead of like a mom and pop, using all the tools we've used, all the EOS systems, putting our management in place and just slowly but surely like operating it better and letting, appreciation, like the forced appreciation of us running it better, do its thing. Yeah. Also,
Yeah.
you need to stop buying in the Pacific Northwest. Come, let's buy something
Yeah.
together in the Southeast. I swear it's better here.
Yeah. Well, the last two I've bought have actually been in Texas, just
Ah,
outside of San Antonio. And one of them, I mean, the very last one that I bought was, I mean, it was exactly like you said. It was listed on market for 1.5, and we looked at the P&L, we looked at everything. We're like, dude, this is not worth 1.5. And we actually ended up buying it for 750, which is, or maybe it was 1.4, it
nice.
was listed. But yeah, I mean, that just goes to the point that it doesn't matter what a property is listed on market for. That does not mean that's what that property is worth. And anybody out there who is interested in mobile home parks, I think specifically mobile home parks and RV parks, there's a lot of opportunity just to look at the P&L and understand it better, and then offer something that is accurate. If you can stand behind that number, if you can give a reason why you think this number is an accurate number, sometimes people take it. And you just need to really understand where the actual value is, and why your number makes sense. It's kind of a
Yeah.
tangent, but yeah, we're not investing in, or I haven't bought in Washington State in a while, just because cap rates are crazy and it's hard to find deals out here. But Texas is great. Where are you guys looking for deals?
In the Southeast. So like that's where we own
Southeast.
everything. We own one outlier in Oklahoma City, and I love that park.
Okay.
Like someone brought it to us. But other than that, Carolinas, Georgia, Southern Virginia, and
Yeah.
look closing on something in Alabama in like 60 days or so. So yeah, yeah.
Very
The
cool.
Southeast is a good place to buy mobile home parks. It's really good.
Yeah. Yeah. For sure. There's a lot of them out there.
Yep.
So you guys, mobile home is your bread and butter. Do you guys also do long-term stay RV, or is RV something you don't put into the portfolio?
So we have a 26 unit RV park. I'm not crazy about RVs, even long-term stay RVs. The idea is like, okay, let's make this more affordable and keep keep like providing that affordable housing for people and like even cheaper. A lot of times, long-term RVs, it's like you don't have to pay for the home. You can buy an RV and then just rent it out, and it can be an even more affordable way to live. The thing I am not crazy about is, it's so easy for someone to just pick up their RV and leave overnight. And it's like,
Yeah.
like, what are you going to do? I mean, sure, I could have a year-long lease, but like on paper, that means almost nothing because what are you going to do? Am I going to sue someone if they just break that lease? No, because that's a lot of attorney expenses, and it's I'm probably not going to get anything. So like, I get it. I see the need. I see the value that can be provided. I think we just don't like it as much. Like it's
Yeah.
there's too many
Not as
potential moving pieces that we don't like.
Yeah. I will say RV parks have the highest cash on cash return that of any asset that I've ever bought. I understand it is, they're a lot less sticky, and so they can definitely leave at any point. But if you're looking at it just from an investment, RV long-term stay RV, and I'm not trying to change your mind here, but I've had some good experiences in that realm. So,
Bro, I
anyways,
won't even I'm not disparaging the asset. Like by all means, a ton of people do really well in a ton of assets that I do not have the appetite for. So like
yeah.
I bet you guys are killing it. I love it for you.
Yeah. Well, and that goes, I mean, we say this so many times on the episode, to stay away from the shiny object syndrome, because every time you switch asset classes, you switch, business models, whatever, you're losing the competitive edge. You're losing your ability to focus in on one thing and get really good at that one thing. It's the thing that I struggle with the most. Real estate, there's so many different ways to go about doing it. There's so many different things that you can do. You can do short term, you can do industrial, you can do mobile home. And there's always this pull to try something new, but that's not where expertise comes from. That's not where really your ability to give your best to the world to get your best return. That comes in just focusing in on one thing, on mobile home parks, on self-storage facilities, on whatever it is, and just being amazing and being an expert at that asset. So I love that you guys are staying in on mobile home parks. That's what you're doing. That's your bread and butter. But I also know that you guys do invest outside of that. It sounds like you've done multifamily as well.
Yeah, yeah. So that shiny object syndrome, I mean, so, I was a nurse. I quit my last nursing job in September of 21, so almost 4 years ago, right?
Oh, nice.
And it was so weird because I went from having a stable check to it not, and just having some savings and not having replacement income. So the shiny object syndrome led me to try and fail at single family wholesaling. And I lost a ton of money.
Mm,
And then like,
yeah, wholesaling.
that was all 22 was me failing at single family wholesaling and barely getting by. Early 23, I'm looking for another nursing gig. And I start changing my mindset of like, okay, like instead of trying to make money on other things, why don't I figure out how to make money to live with the asset I love, So I took acquisition fees, and I took more consistent property management fees, and it was a lot of like treading water and trying my best not to sink, but I got through. I didn't have to go back to nursing. But at that same token, I still wasn't focused. I was like, okay, so in 23, I want an apartment, I want an RV park, and I want more mobile home parks. And I would say, oh, my name's Tim. I'm into this, this, and this. And I got into an apartment. I didn't like it at all. I'm very grateful that I had it. So I know, like, oh, the shiny object, I made it, like, made stuff up in my head. I thought, all these apartment guys, oh my
It's
gosh,
always greener on the
bro,
other side.
bro, yes, yes. And then like same with the RV park, I got into the small RV park and I was like, oh sweet, and I'm like, oh okay, there's pluses and minuses to this too. And so it's like, why don't I stick with the thing that I'm still excited about, and like I know
Yep.
the ups and downs there. And everything else, it made me realize, yeah, everything has its ups and downs. There's good and there's bad. And there's a million ways to make $1 million. So why don't I do the way that I'm excited about, and I'll probably be best at that. And so yeah,
Yeah.
it helped me to narrow my focus, and like that's why it's easy today for me to be like, we just mobile home parks. We've done everything
Yep.
else. We're really, really, really good at this, and we're going to stick with it.
Yep. Yeah, you just got to keep saying no to that little nagging thing that's in your head, like, oh, this is a better opportunity, and just stay where you're at. The hard thing once you pick an asset, mobile home parks, and you're into it, you start to think like, oh, all the opportunity is gone. There's no more deals, but that is just never the case. There's always more deals to be had.
Oh my gosh,
So yeah, I
yes.
guess the synopsis of that portion is stick to an asset, choose one, and stick to it.
And like the thing is, okay, anytime someone's like, "Oh, there's no more deals," it's like you like again, it goes back to you don't find deals, you make deals. And like none of
Yep.
the deals that I have now are list price.
Yep.
It, there's always, no matter what, if you like the asset and you like where it is, there's a price that works or there's a financing strategy that works. And so, like every time I'm making
100%.
an offer, there's a cash at close price. There's a seller equity where they gift a little bit of equity back into the LLC and have 19% ownership. And then there's a seller financing offer. So it's all the same, and it's like here's the solutions that we can provide while getting our investors the returns that like we get investors. In order to raise
Yeah.
capital, you got to get these adequate returns. And so it's like,
That,
here's what can work. And like almost
yeah.
always it comes back with no. And then it's me. I love that for you. I hope you get your price you're looking for. Can I call you in like 2 months and we'll see? And then in 2 months I
Yeah.
call them and maybe something changed, maybe not. Maybe it takes 6 months, but it's like, okay, when they get to the place where, okay, it's not selling for what they wanted to, then it's let's figure this out. Let's figure this out together because
Yeah.
there's nothing that had hurt me in the past as much as like going head to head with like either a broker or a seller. What really works is
Yeah.
like, bro, let's get on the same side of the table. The
Yeah.
problem
Let's
is,
find
how are
something
you
that
going to
works.
sell to me? And we both have to tackle that problem together because we both want to walk away like positively about the outcome.
Yep, absolutely. That's interesting. I mean, you have a similar approach to offers that I do. I always give them a cash at close offer. We get bank financing. This is the offer that we can do, and then I always give them a seller financed offer, which is usually more, and they get that interest, all that stuff. But you mentioned something there in the middle. You said a seller equity offer. That is different and not something I'm familiar with. Tell me a little bit about it.
Yeah, so it's where you use bank financing still. They gift usually 10 to 19% of the purchase price back to the LLC that's going to be owning it. So they have a little bit of ownership. I give them like super low interest rate. And like the point is to be able to give them more. Uh, so like I can give more of a purchase price if they can hold back, 19% at like 2% interest only for 5 years. And it makes them so they're not getting everything right away, but so I can
Mm,
give them usually a substantially higher offer price because of that. So it's like if you're looking at the capital stack, you've got your bank debt, and right now it's about 8.5%. You
mhm.
got your investor pref, which a lot of people don't count that as capital stack, or we treat all of the investor preferred return as like a bank loan, even though it's not. Like if
Yeah.
we keep that mindset, we're making sure that we're paying that and that we're keeping it top priority. Um, so you got that, and then say the seller has gifted $500,000 of equity into the deal at 2%. I'm paying that's like a lot smaller of a debt service payment than if I was going to pay $500,000 at 8% pref to investors. So it's just,
Mm,
a different way of getting creative with it, kind of like a
I
uh,
see. Okay.
hybrid.
And this is not a second mortgage. I mean a
Correct.
second position
Correct.
loan. This is so you get your first position. The bank is in first, but the seller's not in second position. They just actually I'm not quite sure I understand. So they
So they
they
have they have 19% ownership of the new LLC with no voting rights. Um, and
Ah,
it is, yeah. So
okay,
there's
I
no
understand.
second lien, no second position, none of that craziness. So it's all
Yeah,
like, ownership of it, continued
you
ownership.
are giving them
And like it's
ownership of the entity. That makes sense.
Yeah.
And then,
And then when you
so
pay
then
it
you can
off, like
show
when you pay
them.
them off that extra 500,000, then it's like they have no more ownership at all anymore. But it's a
Yep.
way that I can give them that extra $500,000 or whatever, that higher purchase price that more aligns with what they're looking for.
Yep. Yeah, that makes a lot of sense, and it's really creative, which is really why I love hearing those kind of strategies, because that's what gets deals done. It's so hard to get both the seller and the buyer, in that position where everybody's happy, and that's something that can really bring the seller over to the table to the point where they're willing to sign. So yeah, I'd love to hear that. I just took a peek at the clock. We have blasted through our 20-minute time slot, so it is time to push into the quick question round. Are you ready?
Let's do it, bro.
All right. It starts with education. It could be any form. It could be a mentorship program you've been a part of, a conference you've gone to, a movie you've seen, anything. I just need 2 recommendations, one for general life wisdom and then one for business or real estate.
Oh, wow. Okay, so um God, I want to give the same for both. Okay, so I'm part of Action Academy. Brian Lubin has like a really great community together, and it has super helped me in terms of like clarity, and like KPIs, doing the like big things that move the needle. So I'd say that's probably, a really great mindset community, and then a great business community that I'm part of is the Boardroom Mastermind, which is like very, very heavy focused on like, when I started this, it was me and some guys taking down some mobile home parks. Um, and then over the past 5.5 years, it has evolved into, okay, we are a business that, serves investors, serves uh, high earning professionals to double their money in 5 years and get them a ton of tax benefits in year one through recession resistant mobile home parks. So it's just elevating ourselves, making it so we went from the minor leagues to the pros, and we're just, always pushing to get better. There's a ton of books like that people could read, and so like I'm not going to go into all that. um, the only book I'll say I love, Buy Back Your Time by Dan Martell. Really, really
Yeah.
solid one. It wasn't
I like
applicable
his
until this
YouTube
year.
stuff too.
Yeah,
Oh
yeah,
yeah. Yeah, Dan Martell, he's yeah, I like his general message. It's pretty good.
yeah.
Great suggestions there. I'm going to move us to the next question. This is for your younger self. So let's go back to the Tim who was just getting his first nursing job. Go to him, look him in the eye, give him one piece of advice moving forward.
Stop drinking so much. That's it. I've been in recovery for the last 4.5 years. So yeah,
Nice,
I went down
congratulations.
some dark rabbit holes.
Yeah, yeah. Yeah, stopping drinking. I never really struggled, but the just in being an older adult in your 40, I'm almost 40 years old, and I just like I have one beer and the next day my body just cannot handle. I just like I'm all foggy, and it's just once you get older, it's a difficult thing to deal with.
Yeah,
All
yeah.
right, next question is about the U.S. It's a big place. There's a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
No, the whole Southeast. I'm not going to give you one metro. I refuse to give you only one. Now,
That's
like,
fair
okay,
enough.
so about that, like, instead of metros, like, we really like secondary and tertiary markets, like right out
Yep.
of those really solid primary markets. Because the primary markets, I live in Charleston, South Carolina. Mobile home parks sell for crazy prices, and like it we're not the right buyers. We're not the ones who have a ton
Yeah.
of 1031 money, or
Yeah.
we're,
You're not a REIT.
giant PE firms that have to place capital. Like we have to be way more selective. So the
Yeah.
Charlestons, your Charlottes, your like Greenville proper, all those like big markets in the South, it doesn't make sense, but we're doing very, very well in secondary and tertiary markets.
Yeah. Yeah, those markets that are just outside the main markets that you're looking at, those are that's where I've done the best. Some of my best properties are just outside of DFW, like
Nice.
30 minutes, 45 minutes outside of DFW, and they're just crushing it. I've looked in DFW before, and you can't find
Bro.
anything. There's nothing,
Yeah,
nothing
yeah,
that
I know
makes
I
sense there.
said, you don't find deals, you make them, but I have not been successful in making anything in big metros like that.
Yeah, yeah, likewise. All right, let's talk about lessons learned. Not every deal we get into goes the way we expect it. Most times something goes wrong, but that's when we get to learn a lesson. So take me back to a deal that went a little sideways for you guys, and then what was the lesson you pulled from it?
Yeah, so my second park, there's I bought someone's equity out, and there's all these abandoned park-owned homes, or like quote unquote
Hmm.
park-owned homes, no titles or anything. They're just abandoned there. So I thought, oh, this is
Yep.
going to be easy. We'll come in, we'll get like a wholesaler to come in and buy, or really, we gave all these homes to this person and said, get either some decent people who can do handyman specials, or get some investors in, people who can fix up the homes, and we get the lot rent, and it's relatively easy to bring it from. I think we it was like 33 pads, four or five were occupied when I took over, and then like there's like say 19 abandoned homes. So I thought, this is going to be a great idea. And the wholesaler came in and he got like the worst tenants, the worst ones. And it's so unfortunate. It's these people who just wanted, like, who didn't care about living in some POS home and just like accepted living in squalor. And like I get needing an affordable place, but man, it just became like way run down, and it was chasing people for payments. It was filing eviction a ton, and it made it so difficult. So now it's like, you know, on that first park, I did some magic by not being well capitalized and just figuring out putting a lot of stuff on personal credit cards when we were doing a lot of infill. I'm not gonna lie about that, but I that was like it was like that first deal, right? That's like, oh, this is magic, and I figured out how to do it. It's not a every deal thing. So now we are very well capitalized and very conservative in our approach when we do things. And also, we don't
Yeah.
let people come in and like investors come in and own a whole ton of homes, because man, that's that's led to some pain.
Yeah, being undercapitalized is a lesson I've learned absolutely, and then also not curating your who you let in. That's also a lesson I've learned. It's if you don't if you just let in anybody, which a lot of times, especially mobile home parks, you will get everybody. It's you really do need to curate your community. You need to allow people in that are good people that want good housing, and so making sure that you're a part of that process, or at least you have SOPs in place that ensure that your community is filled with good people. That is definitely a good lesson to learn. So let's talk about your highlight reel. Most of the time things go wrong, but there is always that one deal that you walked into, everything went right, and you walked off into the sunset. So tell me about that deal.
So yeah, no, you're right. There's never a time when everything goes right, but there are times when a lot of things go right, and then like
Yep.
when things go wrong, you right them. Just like a captain sailing a ship. So I love our Oklahoma City deal. We bought it 75 lots, 74 occupied with tenant-owned homes. It's like a mom and pop deal where the guy who owned it before us was, I think, in his 80s. I remember talking to him, and he's like, hold on, let me get out of the sun. I'm at the park doing work. And so it's just like, okay, so that's opportunity. He's doing all the work himself. How can we run it like the professional company that we are? Um, but I mean, there's been an issue like when we bought it, there was a bridge, and Like it would get flooded all the time. I want to say we said that we were going to spend like 30 grand on it. We ended up spending 60 grand on it because we couldn't not,
I've never
stuff
repaired a
happened.
bridge. I know. Yeah, I don't
Bro,
know
it's
anything about
crazy.
it, what it takes.
Yeah. And
I can
so,
imagine. Yeah,
yeah.
get those pylons down there.
So it was a surprise. It was, something we didn't think that we're going to have to do. But when, it started failing, it wasn't a maybe. It was a we need to do this. We can't stick around or wait around for it. And so we fixed it. And I mean, because of that, the community, like a lot of people who have been there for years, they realize that we care about making the
Hmm.
asset better, making their community better, and making it a better place to live. So it's it's super like well run now. And I mean, you get people who don't pay and you file for eviction and stuff like that, but it's such a low percentage of turnover there. It's
Nice.
yeah, I love it. It's really nice.
Um, Side question: Do you guys buy lagoons, water treatment plants, that kind of stuff, or do you only do city water, sewer, or septic well?
So we bought a wastewater treatment plant in Virginia, which is it's mostly good. I don't know if we're looking to buy more like that. It's not a hard pass, but we'll see. Um,
Yeah.
and then the like lagoons is a hard pass on. We don't do lagoons. We are closing on one right now though that has so it's a third party owned lagoon and it's regulated by the state and everything, and so like
Hmm.
I wouldn't own it a lot because I don't know about them, and also I recognize you've got a much smaller buyer pool, but this one is third
Hmm.
party and it's not anything that we have to mess with. The guy keeps it well maintained, and again, it's state regulated, so this is the exception to the rule.
Yeah, yeah. I've had a number of really good deals, come across my desk that had lagoons, and I've never jumped on one, but I've always been curious to hear from somebody who's done a deal that had a lagoon. Like, why are they so bad? Like, why is everybody so nervous about them? But so it sounds like you've never done a lagoon. You've done wastewater treatment, which makes a little bit more sense to me. Yeah, lagoons.
Yeah.
There's a lot of them. There's quite a number of them out there, and they always. I don't know. People are so afraid of them. I haven't quite heard the reason why they're so bad. I understand they can fail, but then, anyways, for another episode,
So
we
so
have
like
we
real
have that.
quick, it,
Yeah.
sorry. So really quick about lagoons. Like, they have a lifespan. So it's like what,
Mhm.
25 to 40 years. Maybe I'm totally wrong, but that's what I've talked to about with people who know a lot more about them. What like so even if I could figure out how to run them, and even if it's like, okay, we're getting great returns, it still super limits your exit. Because even if,
Yeah.
man, this lagoon's like the easiest thing and I'm killing it, with that limited exit, that's really puts a hamper on executing a business plan. And for that reason
Yeah.
alone, that makes it a hard pass.
Yeah, no, that does make sense, because there really are. I mean, anybody who buys mobile home parks and you talk to them, you offer them a lagoon. Most 99% of them are going to say, "I do not want a lagoon," and so you're banking on that 1% who's okay with it. So yeah, that makes sense. That's a good enough answer for me. I'm going to move us on to the final question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. This is a two-parter. Where can they find you? And then what can they expect when they reach out?
Yeah, I am on all social media. Um, so like Tim Woodbridge, it's easy to find me. Our website is wcginvestments.com. We are really looking for, I'm having a lot of conversations with investors and with people who might want to co-GP and bring investors and stuff like that. That's a really big thing I'm doing right now. For newbies, I give like a free class that I kind of created, just, going through the ins and outs of mobile home park acquisitions, what to look for. So yeah, if you want that, reach out to me on any of my socials and just say, looking for, we'll say, master class. How about that? I'll elevate myself right now in that class. Say, you want the master class? I'll send it to you for free. I'm very much have the mindset of a go-giver. So any way I can help, I'm here for it.
Perfect. I will put that link in the show notes. So if y'all want to reach out to Tim, all you got to do is just click a little more in the description. It'll pull down that full description. In there, you can find his links. All right, man. That wraps it up. Thank you very much for hopping on the show.
Thank you so much, man. Appreciate you.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe with realestateinvestingclub.com. If you guys want to support the show, just leave us a review. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.